Good morning, everybody. It's Chris from Serene Education with the 4 majors announced update for the 13th of November 2013. Morning, guys. Okay, 4 majors this morning, starting the euro against US dollar. Just looking at the 4 hours, you know where most of the action is taking place. Just going to have a look at the 4 hours to see if we've seen any action since yesterday. And starting with the euro against US dollar on the 4 hour, you can quite clearly see we have a very mixed result on our 8 indicator templates. And you can see the price on the 4 hour has been very consolidative. There's no other word for it. However, the most important thing over here is that we are above the weekly fib level here at the 23.6. Still, however, under the monthly fib. So as long as it can maintain above the weekly 23.6 level here intraday, then we could see price moving or finding support here and then moving back up towards the monthly fib, which is here at 1349.90 and change. You can see a lot of consolidation here at the same level. This line over here represents my long-term trend on the daily, etc. That was breached, okay, by this bearish engulfing candle lower after the fantastic figures we had on non-farm payroll for the US market on Friday. Now she's pulled back and now she's spending more time below this trend line. Now we could see potentially for price now to continue to the downside as long as it's trading below a price support and resistance level here in the shape of the 50% fib retracement on the monthly. Then we should be looking for negativity to take unfold. You can see the RMO on my 4 hour is still very much below the zero level, just below the zero in fact. You can see that there's more negativity creeping in on our smaller time frames. The R squared is still complementing some of that that long-term sentiment. However, the longer we maintain below the monthly fib, the more likely is we're going to see price reverting to the downside. This breakout, this consolidation, and then a continuation to the downside. So what we're looking for here is as long as price maintains below 50% retracement level here on the monthly, then ultimately we should be looking for price to continue downwards. But as long as it maintains above the 23.6 level on the weekly, you can see it's consolidated here. Indecisiveness, we're looking for a decision candle. Either way, it's moved higher, it's broken the prior current resistance level highs intraday, it's broken higher, so then we could see potential for price to move upside. However, you can see intraday, there's no buying sentiment now on my 5, 15, and 30 minute to complement any of that sentiment coming through yet. So we need to see a decisive candle. If it breaks back lower again, then what we should be doing is targeting back towards our 50% weekly level where we got to on the breakout to the downside on the non-farm payroll figures. So clear objective here, wait, be patient, look for a decisive candle on the 4 hour to confirm price action. At the moment now on the 4 hour, over the last 20 odd hours or so, nothing's happened, guys, so be patient. On to sterling here, very important. Sterling today, we have Claremont count change figures, unemployment rate figures at 9:30 a.m. GMT to start the morning off. We have average earnings index third month year on year, and then the 10:30 a.m. GMT this morning we have Mr. Carney speaking, the Bank of England Governor Carney speaking, and we have the most important piece of news today for sterling would be that Bank of England inflation report. Very important. That's going to be interesting. Connie's going to have a word about that. So if you are looking to trade sterling or are in or trading sterling at the moment, please be vigilant. There's going to be a lot of movement, a lot of speculative movement before, during, and after the news. So if you are in it, tight stops, manage your position very closely, as we could see a lot of whippiness. Okay. Other than that, sterling is trading below a price support and resistance level here that we saw back in November, early November. That bearish engulfing candle closed lower on the 4 hour, and now subsequently you can see it's trading below the 23.6 on my weekly. Nice spinning top here, and then price has fallen off to the downside. If it maintains below the weekly fib, then ultimately what we should be doing is targeting the next weekly fib, which is my 38.2 below us, and where price is trading right now to that level is a healthy 179 pips. You can see the intermediate trend intraday is very much to the downside. A lot more negativity on the chart. The R squared is complementing that. We have a bit of indecision here on our 15, 30 minute and hourly charts, as we have the MACD and the parabolic star not actually working with each other. However, the sentiment is looking lower. We haven't seen any new highs. The institution moving up to above price on my 4 hour RMO has clearly been trading below the zero level, so we should be looking for negative sentiment. So to the downside, I'm looking for a nice bearish engulfing candle. You can see we had a bearish engulfing candle. However, my hourly candle didn't close lower than that, so there was no entry level, so price has pulled back. I'm looking for a nice 4 hour bearish engulfing candle, waiting for the hourly candle to complement that negativity, and then I know exactly where my first target is to the downside here, roughly around the 1570 and change. US dollar Swiss franc, here again, A lot of upside for the US dollar, especially after non-farm payroll figures announcements. However, since then we've had a pullback and then no new highs have been created. I've taken the low here that we saw on the latter part of October to the current high that we saw last week on Thursday and Friday, and you can see quite clearly prices really stalled these levels. We haven't seen any new highs for the US dollar. In fact, over the past 20 hours or so, we've seen a bearish engulfing candle. However, you can see I've taken a fib from the low to the current high. You can see my 23.6 has been my intraday support level on the 4-hour. Intermediate trend has just been breached. However, I need to see the 23.6 level here intraday being broken as well. It's very important. You can see the institution moving average is still below price on my 4-hour. You can see the candlesticks is still very much positive. RMO is still above. So the sentiment is still positive. It's got to be below the institution moving average for this to be genuine negative long term. So if it's going to fall from grace and break this near term support, I'm going to be targeting quite aggressively to my 38.2 and then to my 50%. So from 38.2, you're looking at a healthy 47 pips. And then from the 38.2 to my 50%, which will be back to the institution, is another 44 pips. There again, got to wait patiently for a nice bearish engulfing candle. Look to see if the 5, 15, 30 minute and hourly all complement that negativity, and the R squared's got to move long, and I've got to see a red candle. If I don't see that after the 4-hour closed lower, then there's still no trade downside because the sentiment's not generally moving with. This is just a consolidative in a positive trend. So here I've got to be patient. Got to be very patient, guys. US dollar, Japanese yen, last pair of the day. Here again, you can see swing high, swing high, swing high, swing high, swing high, still swinging higher. The institution moving average price is trading above the institution moving average on the 4-hour time frame, which is good. You can see the indicator box over here very much positive. Massive move to the upside after non-farm payroll. However, we had a pullback, and subsequently then we saw the US dollar starting to move very aggressive to the upside. Doing so, moving into the monthly fib level here at the 50% level at 99.81 and change, and subsequently coming unstuck, not moving any higher, and then pulling back. So what we can do is take the current low that we saw in the latter part of October, move it to our current highs, which is the resistance level highs at the 50% monthly retracement level, and then look to see where the 23, the 38, the 50, the 61, and the 78.6 are. You can see the 23.6 is back towards price of one resistance, but also the trend line resistance. So if there's any further pullbacks intraday, then we're likely to see price moving towards these levels. It's a healthy 30 pips and change away. However, the candlesticks are still very much positive. I still have a blue arrow, blue candles, RMO above, and the RMO indicator is showing red. However, I've got another 126 minutes to wait because the 4-hour candle isn't closed. So this hasn't closed yet. So it'll be interesting if this still maintains upside if we get another bullish engulfing candle. The sentiment is still very much up. However, the longer it takes, price takes to get above the 50% monthly retracement here, the more likely is more negativity is going to play in the way of things, and we're going to see prices reverting to the downside. However, at the moment now, everything looks positive, so therefore I should look for more buying opportunities. In saying that, we are trading quite close to the next level, 22 pips and change. Take away the spread. There's just not enough in here for me to really get a recent bang for buck. Here, put a trigger alert above the 50% retracement, fib retracement here on the monthly, and look for a nice 4-hour candle close higher than that, because we get above that, then I can target my weekly fib level, which is above me at 363 pips and change away. So by the time we get a nice 4-hour candle close into that, it's going to take away a good couple of pips. However, it's still going to be enough in the tank for me to see a genuine return on investment. That's it, guys. Short and sweet. Please be aware of the news out today, especially for sterling. A lot of news out for sterling. Claremont count changes, very important. Unemployment rates for the for sterling, very important. Then we've got Carney speaking at 10:30 GMT this morning. Plus we have the inflation report for Bank of England. So very important news for sterling this morning. Then we have the 10-year bond auction for the US market. We have federal budget balance figures for the US market. They're expecting a negative figure there from a positive previous figure. So that's not a really good sign. So if it comes out even worse than that, expect the US dollar to start to stall. In between all this afternoon at 12, at just after 12 o'clock this afternoon, we have a German Baba president speaking. So then we have the New Zealand dollar news closing off the day. So if you are trading sterling today, it's the one to watch because there's a lot of data out for sterling this morning. So keep it simple. Follow the rules of your strategy. Back it up with some money management. If you are using Serene Education's templates, however, please follow the rules of it. Okay, you've been taught how to do it. Treat it very mechanical. The whole approach of the FX8 Ultimate template is to keep things very mechanical. Take the emotional out of it. Got to take emotion out of your trading. Got to be very, very mechanical in your approach, and you'll find that you'll be a lot more profitable going forward. You back it up with some money management, excuse me, I have to trip over that, and you'll have a definite winner. Okay, so I'm going to leave you with that. Have a fantastic trading day today, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.